Hey, what's going on, investors? So I want to talk about five main markets that I will not be investing in for the foreseeable future. So first, let's get into it. Airlines. I will not be investing in any airline companies for the next several months. All of this is speculation. All of this is in my opinion. So I put out a chart a few months ago about the four major airlines. Within that chart, it was about debt to equity ratio, um, and I'm not going to get into it because it was already put out there. But with the number one company, if in my opinion I would to invest in as a airline would be Southwest Airlines. But reason why I will not be investing in any airlines is because if you look at the history, all major U.S. airlines at some point have had a bankruptcy, and within having a bankruptcy, the last person to get paid are the investors, guys like us, shareholders, um, and right now with these uncertain times, people not flying, people aren't willing to get on an airplane and just be crammed in there with a bunch of people. Revenues down. The airlines consistently need bailout money. Just last week, Southwest Airlines CEO announced that they're losing $20 million a day, just a day. Um, and just me as an investor, that's just uncertainty. I'm looking to either invest in growth or I'm looking to either invest in dividend. And yeah, people like, oh, well, hey, they were at $50, $60 a few months ago before Corona happened. Okay, that doesn't mean that they're going to get back to $50, $60. You know, what's going to happen is every time they announce earnings and they announce that, they took big losses, the price of the stock is going to take a big loss. It's going to take time. It's going to take a lot of effort. And me as an investor, I just don't want to be a part of it. I see in my quotes, I see the blitz. Those are just unstable stocks to be into right now, and I just won't put any of my money there. But if I had to bet on one, it would be Southwest, only because Southwest has the cheapest debt out of all the U.S. major airlines. So going into my next one, our retails. I will not be investing in any retail establishments. You have Ross, you have Burlington, you have TJX. Um, I just will not invest in any of those establishments. Why? Because from they're not considered essential. Why? Because they don't sell things like Walmart or Target does, groceries. And with governors playing red light, green light, 75%, 25%. Oh, we need to shut down. Oh, we need to close. You may have out here where I'm at in Texas, we have stores open, but in New York, some of those retail establishments just open back up. So overall business, the sales for the companies will be down. The profit for the company will be down, and those affect the overall business, not just certain states. So you need all of the establishments to be up and running in order for the company to meet their quotas. And right now, I just don't see. You have a lot of companies having to take um, markdowns. They have to put a lot of clothes on sale. They have to do a lot just to get the customers money. And if the customer doesn't have money to spend in there, and they don't have the money to spend it at the price that it needs to be in order to make a profit off of it, because if they're always putting clothes on sale, how can they make a profit off of it? And in my opinion, I just don't see that being a sustainable method going forward right now. Yes, some states are open. Yes, some states have the stores open, but not all the states. And they're doing more markdowns during times that aren't the holidays, during times that are peak season, but you're doing markdowns. You're doing for sales. You're doing 50% capacity, 75% capacity. Oh, we're going back to 25% because of COVID-19 cases are rising. That's just not sustainable to me. That's not a smart move. I don't see a dividend happen. Some companies are announcing that their dividend is either cut or their dividend is suspended. So why would I park my money in those companies? Then you get those, oh well, they were around $100 before COVID. Once again, that doesn't mean that they're gonna go back to those prices. I want people to start thinking of the long term. The long term. Will these companies go under? Will they get, chewed up by a conglomerate like Amazon? Uh, you know, for example, Kohl's, Kohl's needs to just consider selling to Amazon. But I believe that time has came and gone because now Amazon is looking to, and in another video we'll talk about this, but Amazon is looking to occupy some mall spaces from Simon's Mall. Simon Mall is the largest mall operator in the country, and they have spaces from J.C. Penney, who's went under, another retail establishment, J.C. Penney's and Sears, who all of those stores are shut down. So why not let Simon Mall lease them out to Amazon so Amazon can have hubs within 10, 15 minutes away from your house? That could have been Kohl's go-to play for the future, but Kohl's missed out on that boat. Now Amazon is looking to put their stores their distribution centers in Simon's mall operations. So, but going into my next topic is restaurants. No, I will not be investing in any restaurants. I considered investing in the Dardens, investing into Dardens, who controls a lot of Olive Gardens, or you have Red Lobsters. But once again, those particular locations are, when we go back to my discussions on the retail establishments, you have 75%, 50%, 25%, only limit to 6 members per table. I just can't see how a restaurant can make a profit. They can make money, but can they make a profit? How can they make a profit running off those guidelines? And for someone like me with a family of 7, I'm not gonna let one of my children not eat at the table with me because we can only have 6 at a table. Then you have some restaurants want you to have a mask. Some restaurants don't want you to take the mask off until you start eating. It's hot out here in Texas, so I don't want to just be wearing a mask inside the establishment after I just left from outside in 100 degrees weather wearing a mask. So, but then you have those, oh, well, Uber Eats and Grubhub and et cetera, et cetera. Okay, I get that. But I'll wait till the numbers come out from how much money Uber Eats and Grubhub is making just off of to-go orders. I'll wait till the numbers come out, which some of the numbers have came out for these establishments like Darden restaurants. That the demand was there, and they've made some type of profit, but it's not gonna be as great of a profit as if the restaurant was at full capacity. And all of these establishments, for far as Olive Gardens and the TGI Fridays of the world, or the Red Lobsters of the world, there aren't any establishments at 100% capacity right now. So until I see things reverse or change around, then I will not consider parking any of my money in any restaurant stocks. Going into the next topic, cruise line. Now this is one that I'm on the rim of. Do I believe cruise lines are always going to be here? Yes, because people want entertainment. I think people want entertainment more than they care about going out to the restaurants to eat. But with these type of cruise lines, there's only 3 majors. You have Carnival, you have Royal Caribbean and Norwegian, and then you also have the Disney cruise lines. But cruise companies are not an establishment within the United States. They have offices here, but they're not within an establishment in the United States. They're not an established company in the United States. Most of these are European companies, so when the bailout money came, they did not receive a bailout. Each of these companies are announcing that they're losing well over 50 million a day by ships just sitting there. Um, and yes, I've already have did my research, and when these companies do start operating again, they will have a capacity limit. Once again, why would I park my money in a company that has a capacity limit? So when it's time to announce their earnings, they're going to be down from year over year. Carnival, who had a very good dividend payout leading up to the coronavirus, announced that the dividend was suspended, as well as the other three. And it's going to take some time for these companies to even get back to the operating um, profits that they were before coronavirus. They're going to have a lot of things in place that are going to hinder them from being able to operate like how they used to be. You're gonna have to wear masks. You're gonna be in glass. You go to the restaurants and you're gonna have to every other table is gonna have to be empty. It's just uncertain times, and I won't put my money into companies that are not able to make their full profit. And in my opinion, this is all my opinion. Always, please do your own research. Always, please consider your own thoughts before you consider someone else's. But I have a great track record. I know what I'm doing. And if you are someone that follows me and you trust in me and you trust in my word, and you can understand that I know what I'm doing. Point blank, period. So, and on a final note, are there some opportunities to make money in the short term off of any of these stocks? Yes, but understand, only way to make some type of flip, you have to put large amounts of money into these companies. I've had someone that brought Carnival at $8, and when it went up to about 16, $17, and they had over 100 shares. Yes, they've made money that way, but you can't put $20, $30 on an $8 share and expect to make some large substantial amount of money. That's just not going to happen. But as always, you make your own decision at the end of the day. You figure out what's the best method for you, and hopefully you are able to capitalize off of it and make some type of profit. So if you like this video, please like, subscribe, and share, and leave your thoughts in the comments. I know these are going to be some very good topics discussed. So let me know your opinion, and peace.